I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara and this is the Know Your Why podcast. Today I'm here with Rich Summers. Rich is an active real estate investor and entrepreneur. He has a portfolio of apartment buildings in short-term rentals valued in excess of $35 million. Rich started out his real estate investing journey by cashing out his 401k to buy his first apartment building. So first of all, Rich, thanks for coming on the show. I really appreciate you taking the time.
Jason, it's an honor to be here. Thank you so much for having me on. I'm excited for the conversation today.
Me too. And I was saying before we started recording, I'm a big fan of your podcast, so I'm excited to have you. And I'd really just love it if you would kind of tell us your story. Just start from wherever you feel like you want to and kind of walk us through your journey into real estate.
Yeah, absolutely. So I grew up middle class. My mom was an immigrant. She was grew up in Taiwan. My parents both know the value of working hard for your money and saving money. I was taught from a young age to go to school, get good grades, go to college, and get a job. And for the most part, that's what I did. I have a background in retail and sales. Started working some retail jobs when I was 16. In college, I got into cell phone sales. That was the first time I really realized that I worked in something to where I could kind of control my income to a certain degree, and I really excelled at it. I really liked sales. I started selling cars. Graduated school 2008. I wanted to sell commercial real estate, and I interviewed with CB Richard Ellis and Grubb and Ellis, a couple commercial brokerages at the time. And it was '08, everything was coming down. Both of those internship positions were pulled, and they were like, hey, we love your hustle, but this is not a good time to get into the industry. So I found myself working on a car lot, figuring out what I was going to do in life. And I kind of backed into a job as an air traffic controller. Someone had told me that they were hiring with no experience, government job. I applied, and 2 weeks later, they said, hey, we got a position for you if you want to come out to Oklahoma. So I said, sure, let's do it. So I went out there. That was where the initial training facility was. Ended up spending 6 years in LA, 5 years down here in San Diego as a controller. And along the way, I read the book Rich Dad, Poor Dad, remembered real estate, and thought, man, I gotta change my path here. And so I just started, reading books, listening to podcasts, going to networking events, everything I get my hands on that involved real estate investing, apartments. I just became obsessed. I didn't do anything for like 6 months, but study and network. And at the time, I did what society and quite frankly, like a lot of people in my not in my life, but a lot of people will tell you is a little bit too risky. But I cashed out the 401k, pulled out a home equity line of credit against my primary residence here in San Diego, and started buying some cash producing real estate. First deal was 11-unit building in Cincinnati. Shortly after that, I partnered with my two partners today. We went in and joint ventured on a 32-unit building in Indianapolis. Started the podcast, bought some short-term rentals along the way, learned how to raise money, took down a couple larger syndicated deals last year, and just launched a new company in the short-term rental space called FortuneCribs. And this year I'm going to be focusing on growing the short-term rental side of the portfolio. And that's kind of my story in a nutshell since I've left the day job, and I've been full-time real estate investor and entrepreneur for just over a year now, man. It's been a fun journey.
Awesome. I mean, a ton to talk about there, so I'm excited. Um, First of all, and this is real estate unrelated, but I had no idea that you could just sort of become an air traffic controller, that it's
hmm
not something you have to go to school for or anything like that. I assumed it was like a 4-year degree or something, there was some higher level of training that went into that.
Yeah, there's historically been a huge shortage of air traffic controllers, I would say for the last 12 to 15 years. And so they are always hiring people. I believe you can still get hired off the street if you apply at the right time. There's a lot of training that you go through. I mean, you might be,
Right.
it took me 2.5 years to get done training, so it's not easy, doesn't happen overnight, but it is lucrative, and it is fun if that's your thing.
Cool. Very interesting. Um, well, let's talk about cashing out the 401k, because as you sort of alluded to, most people would say that's very dangerous. Don't do that. Why would you, you're taking a huge risk there. So what, I mean, how did that work for you? Maybe if you don't mind talking about sort of what negatives and positives, like why did, obviously you did it, you felt there was a positive to it, but I know that people will probably put up a lot of resistance when they hear something like that. So can you dive into that a little bit and talk about your mindset behind it and what you really gained slash what was the downside?
Yeah. Well, I knew I needed cash flow so I could quit the W 2. And if you study the 401k model, it's been around since the 1980s. It does not produce any cash flow. So that was one of the downsides. The other thing that I didn't like is you have to wait to age 59 and a half to start taking distributions from your 401k. That's a long ways away. If you try to take a distribution before then, there's a lot of penalties and a lot of taxes that you got to pay. And they strongly discourage you from pulling your money out, and it's challenging. It's because it's like, okay, this is a slice of my hard-earned income and time that I'll never get back. That's my money. If you go to the bank or a credit union and try to take a withdrawal, they give you money. But with the 401k system, it's like they don't let you take it out till age 59 and a half. So it's like, whose money really is it? And I used to be a big 401k pusher for many years because that's all I knew. But all those things compounded in the fact that I knew I needed some sort of nest egg to really like get started. You don't need to, but it's nice if you have a little nest egg to get started. And so I decided, you know what, I'm going to cash this out. And it was scary at first because, like you alluded to, society says it's risky and you shouldn't be doing it. So I was essentially taking a risk, but looking back, Jason, at the end of the day, all those risks that people allude to are real. So put some weight on those risks, but on the other side of the balance scale is another risk, and it's this. I could be 80 years old one day, laying in my bed, staring at the ceiling, kicking myself because I never tried anything in life. How about that risk? Because that's a risk too that a lot of people don't talk about.
Yeah, no, I agree 100%. And I'll add another risk to that when you're talking about money that you can't access, whether it's a 401k or an IRA until you're of retirement age. What if you don't make it that long?
Exactly.
Then
Because
like nobody wants to think that way, right? But the reality is that you might not make it to ever use that money or do anything. It might just disappear essentially. So it's kind of there's risk to taking it out, but there's in reality a lot of risk to leaving it in there too. So it's kind of lost opportunity cost.
100%. And you're completely right. I mean, tomorrow is never guaranteed. We don't know when our last day is. And when you look at it that way, that gives you more reason to take action and commit. And looking back, I'm so glad I did, because if you can strategically invest in the right assets, since I cashed out the 401k, that money's coming back to me through a couple deals already. So I got my money back. I still own one of the assets, and then I was able to 1031 one of those into another one. And those deals are both paying me significantly more and growing my net worth significantly more than had I just stuck with the system.
Yeah, yeah. It's a topic that has come up a number of times on this podcast with different guests, in that the traditional retirement route, what people learn in school, what they're sort of taught to follow along, I guess it's better than doing nothing. It's better than just either saving no money, or it's a better option than doing nothing, but it's really not the best option. It maybe is the easiest option because you don't have to think about it, but it's definitely not the best option for what you're, because with now that you've got that money invested, as you mentioned before, if you can't touch it till you're 59 and a half, you're literally just like piling money into that 401k. You can't do anything with it until 59 and a half. With your real estate, now you've put it into these cash flowing assets, and along the way,
you're getting money, you're getting cash flow that you can use to reinvest, to fund your lifestyle, whatever it is, and still those assets are growing over time. And so when you do get to 59 and a half, you're gonna have received all of the cash flow along the way and still have still have those assets. So
Yeah.
it's just a it's very eye-opening, I think, once you kind of figure out that maybe the 401k is not really the best, or the IRA, all of that stuff's not really necessarily the best way you can do it.
I agree. I mean, you don't get to take advantage of leverage like we do in real estate. You don't get to take advantage of all the tax advantages like we do in real estate. There's just so much baked in there. And you're right. I agree with you. You know, for the everyday person, if they're not going to do anything, I think investing in the 401k is better than doing nothing. However, if you have a competitive advantage in real estate investing, I don't think that there's any reason you should have any money in the 401k.
Yeah,
I
yeah,
strongly believe that.
it's a very valid point, and you can. I think some people would argue it, but I really think it's once you get into the real estate space, it's hard to see why that makes sense. And I mean, there's so many. It's funny, like all these things just keep popping in my head about what it's like. You don't have any control over it. I think if you looked at your returns that you achieved in your 401k versus the returns that you've achieved in your real estate, it's probably not even comparable. It's just. Uh, Another example, there's so many rules in place for the 401k and IRAs in terms of maximum contributions and things like that. So you can't even you can't even sort of be a go-getter and say, I'm going to, put more money into this so I can really build for my retirement. It's not an option. And if you work, I learned this the hard way, if you work for a big enough company with employees that have a wide enough range of salaries, you actually still can't do the maximum because it has to be averaged amongst all of the people that are contributing. So
Mm,
if you're a high earner in a company with people that maybe aren't as high earners, you can't actually contribute to the maximum. So there's a lot of things that aren't spoken about. It's kind of like, this is just what you do, but it's realistically not the best option, I think. So that's a bit of a off tangent, but I mean, let's talk about your real estate portfolio. Kind of, you said you bought an 11 unit and then 32 unit, and then sort of got into short-term rentals. Maybe talk about that path, but how you picked and chose where to go with each.
yeah. So when I first started studying real estate investing, I was most attracted to the multifamily asset class. So that's really what I focused on studying strategy, how to buy value add apartment buildings and how to source them and that sort of thing. And so, you know, bought the 11 units in Cincinnati and then JV'd on the 32 units in Indy. Since then, I've refinanced all my money out of the 11 units, still own it. The 32 unit we actually just sold and closed a couple weeks ago. Did a nice that was nice. We basically tripled the value of the property in
Awesome.
just over 2 years. Renovated 50% of the units, clean up the deferred maintenance. The market is hot right now, as you know. Along the way, backed into a few short-term rentals. I had there's a local credit union here that was giving me some very high leverage loans for residential property. And so along the way, I started buying a couple short-term rentals. They actually did very, very well for me. Those short-term rentals are what provided the cash flow that I needed to quit my job. Um, and so, you know, it's been challenging for us to find deals to pencil. We took down a couple larger syndications last year. We took down a 150 unit in Greensboro, North Carolina. That was our first syndication, the Arbors. And then shortly after that, we took down a 145 unit building also in Greensboro called Timber Creek. Those deals just aren't out there again. They're just not out there today. Yields have come down, cap rates have compressed. If you have a broker listed opportunity out there with a decent pricing guidance, there might be 50 property tours and 40, 45 offers. And by the time you get to best and final, you're going to have to overpay to be awarded that deal. And so we can't find deals to pencil, at least in the markets that we've been looking into. Meanwhile, these short-term rental assets that we have just been chugging along. 97% portfolio-wide occupancy, cash flowing, even through the pandemic. And the tax advantages with these are insane. I could touch on that if you want, but decided just, sometimes you got to take what the defense is giving you. And it's not that we're going to stop buying multifamily altogether. We're going to continue to manage the properties that we have, and we'll look at some deals that hit our inbox that are actually, off market. But this year, 2022, we're going to focus on growing the short-term rental side of the portfolio. So that's kind of my reasoning behind it.
Yeah, no, it makes a lot of sense. It is very hard to find a deal that you won't have to overpay for. And I mean,
Mm.
probably 2 years ago, people were saying the same thing, and the market continues to go up. So it's kind of, you don't know what's going to happen, but you also have to be conservative and be, smart, and just not, sort of go outside what you're comfortable with in terms of pricing. And I agree. It's like, if it looks like a deal that makes sense on paper right off the bat, there's probably something going on, either that you don't know about, or there's going to be 40, 50 offers. So it's not it's a tricky market. It's not impossible, but it's a tricky market. And I do think short-term rentals have become really, really hot as well now. Everybody seems to be talking about it. I'd love to hear kind of about your short-term rentals. I want to hear about FortuneCribs. I kind of want to go into all that, and I also would love it if you'll throw in some of those tax benefits in there, because I have myself been looking at it. Are your short-term rentals all around San Diego, or do you have them kind of in other markets?
Yeah, so San Diego, Scottsdale, onboarding third-party client properties right now in Indianapolis, St. Augustine, Florida, Arizona, and then we're looking at a bunch of other markets right now. But to touch on the tax benefits, so one of the loopholes in the tax code says if your average guest stay for your short-term rental for the calendar year is 7 nights or less, then you can use the bonus depreciation from a cost segregation study to not only offset the passive streams of income, aka your cash flow, but also to offset active streams of income. So if you had like a W-2 job or a 1099, any sort of business that it was an active business, you would be able to use the bonus depreciation from that short-term rental to offset active streams of income, which is pretty powerful. You don't see that in traditional long-term rentals. And so that's one of the major benefits that we don't see in the apartment space and that sort of stuff. But the cash flow is what is just, it's just night and day. So we can strategically go into specific markets and select properties in neighborhoods that we know are going to do very, very well as a short-term rental. So we have software that we use. It's called airdna.co. You can pull up any zip code in the world that has short-term rentals, and you can filter it down to 2-bedroom, 3-bedroom, 4-bedroom, 6, 7, 8-bedroom, and you can see what the properties are actually making revenue-wise. And so you're not going into these markets and guessing like we used to back in the day.
Nice. So you're referring to those tax benefits and being able to write off in W-2, and just so it's said, neither of us are CPAs, and
yeah,
we're not
definitely do your own research. I'm definitely not a
giving
CPA.
tax advice, but it is something that is very compelling. And I think the term that is tossed around a lot is real estate professional status. That's the way that you can, if you can establish real estate professional status, which has very specific set of rules, then you can start using your passive losses to offset your W-2 or your active income. And so with the short-term rentals, if you don't know this, fine, but with the short-term rentals, is that qualifying you as a real estate professional status, or is that an entirely separate sort of loophole that allows you to use those losses against W-2 income?
So again, confirm this with your CPA.
Yeah.
But as far as I understand it, and as far as I've been, my CPA has been advising me and other people I know in this space, it voids that real estate professional status. So you could have a full-time job and spend significantly less time in your short-term rental business, and you can still take advantage of those tax loopholes. So it's pretty powerful.
Yeah, awesome. Okay, well, talk to me about FortuneCribs. Tell me, I like I said, I follow along y'all's podcasts, and so I I know a lot of your background, but I actually haven't heard about this yet. Maybe I'm just a little behind, but catch me up on FortuneCribs. Tell me what you're doing there.
Yeah, absolutely. So, to circle back a little bit, a few months ago when we discovered, hey, we're going to focus on growing the short-term rental side of the portfolio, I decided, hey, I'm going to start a management company to start managing my short-term rentals as we grow, and then also third-party client short-term rentals as we grow, because there's really not a business out there that is kind of a turnkey service. You hear a lot of people that want to get into the short-term rental space and they want to produce cash flow, but they don't want to do any of the work or learn how to do it. There's a lot of different intricacies that go into short-term rentals, and it can be workload intensive if you don't create the right systems. And so this company is called FortuneCribs. We'll help clients identify short-term rentals in select markets around the country based on their budget, that we feel will do very good as a short-term rental under our management, and our team will help them close on the property. We got all sorts of different lenders that we work with. You can buy product for as little as 10% down. Our team will design, furnish, and then manage all the day-to-day, the cleans, the turnover, the repair, maintenance, the marketing, the guest communication, the accounting, the A to Z, really. So it's completely hands off to the client. And so far, I mean, we launched last month. So far, the appetite's been tremendous. So building out the infrastructure right now, building out the team. We're launching a few properties this week. Got a team out there in Indianapolis and Scottsdale right now, launching a few properties. So it's been fun, and yeah, I'm excited for it, man.
Yeah, that's awesome. I mean, congratulations on getting that going. That's definitely a need, and I think you're right. Like people with the amount of cash flow that at least I'm hearing on short-term rentals, paying whatever, I don't know how you charge, but percentages or whatever it is, but paying something to just let someone else manage it. I think there's probably plenty of money to go around in those, especially in like the high-end luxury type short-term rentals.
Yeah, absolutely. So, I'm putting deals together for the clients, and after all expenses, after debt service, after management fee and everything, we're drawing up deals for them that are anywhere from 20 to 35% cash on cash return. And that's just the cash flow. They own 100% of the property, so they're still going to take advantage of the long-term appreciation, the tax benefits, the principal pay down. People are like, oh, I'm making $150 a door my long term. I'm like, dude, that doesn't even get me out of bed.
Yeah, yeah, it definitely is. It's Do you think so? It just brings up a good question. You kind of went away from multifamily a little bit because the market was so hot and it was hard to find deals. Do you anticipate the same thing happening in short-term rentals, as it seems a lot of people are migrating in that direction as well? It's like I feel like even a year ago it was everybody talking about multifamily, and now I feel like it's kind of transitioned where I hear almost everybody talking about short-term rentals. There's still, if you're in multifamily, you're of course going to hear about it, but in terms of what's being what's the hot ticket item right now, it does seem like short-term rentals. Do you feel like, are you seeing the market get, I don't know, do you feel like it's going to get hard to achieve those returns?
I think it's still the first inning in short-term rentals. I really think it's still the first inning. Um, Apartments, the cap rates have compressed. They're probably going to continue to compress. We're seeing a lot of inflation right now. I think, with the government printing 40% of the currency and increasing the money supply, they're still printing money due to the fact of, this housing shortage that we're experiencing across America. I think it's going to take at least 3 years for them to build enough housing product for us to kind of meet that, demand. And so I think we have a nice 3-year runway of a hot real estate market. I'm speculating here, so I could be wrong. I think all the apartment operators that are buying right now on speculation, they're overpaying. They're probably going to get paid off in the end with all the rent growth. But to answer your question about the short-term rentals, no, I think we're still in the first inning. A lot of the operators in this space are not savvy and sophisticated like we're seeing in these commercial real estate asset classes. And so if you can have a little bit of wherewithal and enter this arena, and strategically select the right properties in the right markets, you can do very, very well. I do believe short-term rentals are part of the reason why the housing market has been so hot, because you know outside investors that live out of state can come in and buy these properties and pay significantly more than the everyday person that intends to occupy them, because they're making such a high ROI. And so I get it, and one of the biggest risks to this asset class is the regulatory environment changing.
Mhm.
We're seeing a lot of markets around the country change their stance to short-term rentals because of the housing market. Also, it takes away long-term rentals away from the actual market, and so it's driving up rent prices as well. So you're seeing a lot of that stuff. But as a general rule of thumb, I tell the clients, I'm like, look, you want to stick to states that are, more conservative, generally speaking. I'll give you an example. So, like a state like Arizona, great short-term rental market, Scottsdale, Arizona. Their governor signed something into effect 4 years ago that says it's illegal for local cities and municipalities within the state of Arizona to heavily regulate short-term rentals, because their stance is the opposite. We want to encourage tourism. It helps stimulate our local economy, helps float our local businesses and restaurants. And so we want the tourism. And so you're seeing some other states around the country. Indiana is another one. They signed the same thing into effect. So you want to strategically get into the right states to protect you from the downside risk. And the other thing I would say is this: you want to try to diversify. So if you're going to go buy and build a portfolio of 4, 5, 6, 10 short-term rentals, you don't necessarily want them all to be in the same market. Ideally, if you're spread across 3 or 4 different markets, if one market turns in terms of regulatory environment, you can simply sell and then move that equity into another market. So that's another way to kind of diversify, if you would.
Yeah, no, it's a great point, and the diversification is a great point. But I also, just the fact that there are certain markets, cities, municipalities that just straight up don't want short-term rentals. They just, I mean, it's because I mean, I've looked into it in a couple of different areas, and more almost for my own use, in the sense that
Mhm.
places that I would like to go, hey, can I use this as a short-term rental when I'm not there? And it's like, I, I, I'm originally from Boston. I would love to have like a condo in Boston. I'm sure it would have high demand, but it's nearly impossible to find a building or someone that will allow short-term rentals. It's very highly regulated. The other place is Charleston, South Carolina. I used to live there. It's a great tourist destination. There's like, you may know this because you've looked into this stuff, but there's like 2 blocks on the peninsula of downtown Charleston that you're allowed to have short-term rentals, and then that's it. The rest, it's a
Mhm.
very select little section of neighborhood that you're allowed to have short-term rental. And it is it is probably the one thing that maybe is, uh, I'm not worried about it, but I think that that's what maybe is the biggest potential issue that you could run into with short-term rentals, is if you buy in these markets specifically for this reason, and for whatever governmental thing happens that changes the rules, then you're sort of stuck with this, and then you have to decide what to do with it. And it
Yeah.
may not sell for the price that you bought it for, because it's then not going to be such a high cash generating type of asset. So um but
Yeah, I agree. And here's the funny thing. So like I've looked in Charleston as well. If you look into Charleston, there's actually a ton of short-term rentals all
oh yeah,
over.
people
And
are doing
so
it. Yeah.
yeah, and so here's the thing, if you get into a short-term rental and the regulations change, you can always fall back to the midterm stay. So short-term rentals in most cities around the country are defined as anything less than 30 days. So if the regs change, you can always go to 30-day or more furnished stay, which there's still a growing demand for
Yeah,
as this
sure.
work from home notion becomes more and more of a thing due to the pandemic.
Yep.
We had Neil Bawa on our podcast a few months ago, and he threw out the number, and he thought this was conservative. 22 million Americans, roughly 22 million Americans, are adopting this new way of life to where they're not going back to the office, and they want to bounce around and explore and live in different cities around the country, and they don't want to move their furniture with them. So they're looking for furnished, um, places to stay. Brian Chesney, the CEO of Airbnb, he said people aren't staying in short-term rentals anymore. They're living in short-term rentals. And so it's
Yeah.
becoming a new way of life. So you got the midterm stay that you can, pivot to, but also, I mean, I'll be honest with you, man, like a lot of these cities that are regulating it, they don't have the wherewithal to actually regulate it. And so like here in San Diego, there's a lot of talk of their regs changing. They keep delaying it. But what I'm going to do here is I'm going to try to get a permit. I feel like if I can get a permit, great. It will bring more demand to those properties that can legally operate. But if you can't, I'm going to continue to operate until they shut me down. I know investors that have short-term rentals in different markets where the regs have changed years ago, 3, 4, 5 years ago, and they're still operating. No one said anything. And so you got some backups. And then obviously you could always sell and move your equity to another market. So it's just, it's good to have backup plans and, exit plans, if you would.
Yeah, you have to have multiple exit strategies. You should sort of always have that in any of your sort of investment endeavors. But it does make sense, and I don't not bringing that stuff up to scare anyone away. It's just sort of it's a part of the conversation when you're looking at short-term rentals. I think is what is that because I agree. I mean, when I was looking at Charleston, it was like if you go on Airbnb, they're all over the place. They're it's the cities aren't really equipped to go figure out who's doing it and then go shut them down. It's just not. So it's kind of there's a disconnect there. But
if here's the last thing I'll say on this topic is if you go into a market to where they have a set up ordinance, an established ordinance, and the city is making tax dollars from every one of your reservations, the city is essentially your partner. And so that type of situation would make me feel pretty good about stepping into it and investing in some short-term rentals.
Yeah. And I mean, it's a good way for the cities to sort of be okay with it. I think the hotels hate it, right? The hotel owners, I'm sure, don't like Airbnb. They don't like, because it's going to cut down on the stays there. But I think you just have to, it's on them to sort of pivot and make the hotel more appealing then. But yeah, I mean, very cool stuff. I appreciate that sort of dive into short-term rentals. I think it's a really interesting space. Rich, let's switch gears a little bit, and we'll go to the questions. I'll ask you the questions that I ask every guest. And the first one is based on the name of the show being Know Your Why. So Rich, what is your why? What drives you, kind of keeps you going? What pushes you?
Yeah. Well, what makes me happy, and I didn't really learn this until my mid-30s, but what I discovered truly makes me happy is growth and progress. And so knowing that I'm always continually trying to grow, not only in business and real estate, but in my relationships, in my health, my friendships that I have, and that sort of thing. But my why is I don't want to grow old one day and have any regrets. And one of my favorite quotes is, don't fear failure, fear regret. And so that's really my why.
Yeah, that's awesome. And I think personal growth is a huge motivational driver, right? It's like, sometimes some people just want to see what they can achieve. And I think that's phenomenal. And having no regrets that's the way to go. That's the way to go out, never looking back and saying, oh, I wish I had, so I think that's fantastic. Second question, tell us something about yourself that isn't well known, a hobby, a special skill, something along those lines that maybe not everybody knows about you.
Yeah. So I love sailing. I love being out in the water. I used to be a sailing instructor when I was younger. I used to teach kids how to sail. And so I've been doing it my whole life. It's just a chill sport, man. You can do it into your older years. Something about just being out in the water, no engine, no motor, you just hear the water and the wind. It's just so meditating. And it's one of my favorite hobbies, man. I'm part of a sailing club out here in San Diego. One day I'd love to own my own sailboat, but go out sailing, sunset cruises along the bay. And it's just so relaxing to bring friends out there and just go out in the water, man.
Nice. I was going to say, I bet San Diego's a nice place for that.
Yeah. I mean, hey man, if you're ever in San Diego, Jason, you gotta come out, man.
Will do. Will do.
Yeah.
I'm just up the road. I'm in LA. So yeah,
Okay.
I'll get down there. My wife and I have been talking about going down and getting the kids to the zoo. So that's definitely on the list.
Okay. Very nice.
How can people reach you? We'll put in the show notes, but what's the best way to, when they hear this, they want to get a hold of you?
Yeah, so you can find me on Instagram at rich_summers. FortuneCribs, if you want to learn more about that, it's FortuneCribs.com. And then Pack 3 Capital, which is our syndication company. We're going to be launching a fund here this spring to go buy short-term rentals with our investors. That's pack3capital.com.
Awesome. Okay. Final question, Rich. What piece of advice would you give to people that are a little, maybe a year or two ago, in the beginning of their journey, when you were sort of starting out? What would you tell them to sort of help them, take that first step into real estate investing?
Yeah, I would say this. I would answer that question more in terms of like an approach. So I used to be this way, and I had to train myself not to think this way. So most people, when they come up with an idea, it's a 3-step process. So step number 1 is I have an idea. Okay, I'm going to do it. And step number 2 is they go into a planning phase. And then step 3, they commit. The problem with that thought process is when you go into a planning phase, most people wait for the plan to be perfect before they commit. And so the more I studied successful entrepreneurs and real estate investors out there, and I'm this way now, but I never used to be, the 3-step process is significantly different. So 1, they come up with the idea like, hey, I'm going to do this. Step 2, instead of planning, step 2 is commit. And then step 3 is figure out how. And so I think the sooner you can start to implement that new thought process, the quicker you'll start actually taking action and achieving your goals in life.
Yeah, I love that. I think that's phenomenal advice. I think a lot of people get lost in analysis paralysis, or just that planning phase. And you're right. People want it to be perfect. And I agree. Like, this is something that happens to me a lot. I'm like, oh, I don't, you can simplify it even to a social media post. You're like, I just want to say just the right thing. And it's like, so many people that are successful, believe that done is better than perfect. And so it's just kind of taking action, getting stuff done. I love your 3-step approach, though. I think that's perfect.
Yeah. Success is not a straight line.
Yeah, absolutely. Well, Rich, this is awesome. I really appreciate you coming on. I think shared a lot of great insight into especially short-term rentals. I think that's a very exciting space for people, and myself included. I may have to have some conversations outside of this recording to hit you up so I can get started too. But I really do think it is, kind of the new thing. And I'm actually happy to hear you think it's kind of in the early innings on this one, so that there's still room to grow.
Yeah, absolutely. Jason, it's been a pleasure, man. Thank you so much for having me on the show. And yeah, feel free to reach out. And your listeners too, man. I do a lot of consulting for the short-term rental stuff. So if you have any questions, I'm always happy to jump on a call or grab coffee.
Awesome. Sounds good. Well, thank you again. And with that, we will go ahead and sign out.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.